Are you tired of earning pennies on your savings? What if I told you that in 2025, you can make your money actually grow risk-free? Stick around because we're breaking down the best high-interest saving account in Canada right now. Why high-interest savings accounts matter. High-interest savings accounts are the no-stress, no-risk way to watch your money grow without locking it into stocks or risking it in the markets. Whether you're saving for a trip, building an emergency fund, or just stacking cash, a good high-interest savings account can earn you up to 10 times more than your regular bank savings account. And in 2025, some of these accounts are offering rates north of 4%. Yes, even with full access to your money. Let's start with one of the most talked about options, KOHO. KOHO's savings account is offering up to 4% interest depending on your subscription plan. What's unique? The interest applies to all your money, spendable, roundups, and dedicated savings goals. Plus, interest is calculated daily and paid monthly. If you're not a fan of traditional banks that nickel and dime you with fees, KOHO's no hidden fee structure will feel like a breath of fresh air. You can access your money at any time, no penalties, no gimmicks. But here's the trade-off. That 4% rate is part of the top-tier Everything plan, which runs about $14.75 per month. If you're okay with a slightly lower rate, the Essential plan at $4 a month still gives you 2.5%, which beats most major banks. Add in cashback rewards, rent reporting to build credit, and sleek budgeting tools. It's an all-in-one fintech package. Next up, we've got a traditional big bank, Scotiabank's Momentum Plus savings account. Right now, new customers can earn up to 5% for the first 3 months. That's one of the best promotional offers out there. The longer you save without making withdrawals, the higher your bonus rate climbs. You can set multiple savings goals within one account, say, one for a car, one for a wedding, and another for vacation. And the platform rewards you for not touching those funds. While the base rate isn't as exciting after the promo period, this is a solid option if you're planning a long-term savings strategy and already bank with Scotiabank. Let's talk about BMO Savings Amplifier. There's no minimum deposit to start, and interest is paid out monthly, calculated daily, so you get the full compounding effect. It's great for those who want flexibility. You can move money freely between your BMO accounts without fees. However, if you're making purchases, using ATMs, or doing in-branch transfers, you'll get hit with a $5 fee. So keep this strictly for saving. It's a great second account to park your extra funds while keeping your main spending separate.
Moving on to CIBC's eAdvantage savings account. This one's a gem for anyone looking to automate their savings game. Here's the deal. Base rates range from 0.25% to 1%, but you can boost it up to 5% with bonus interest plus something called Smart Interest. Just save at least $200 a month consistently. There's no monthly fee and no minimum balance requirement. And with CIBC's AutoSave, you can literally set it and forget it. The downside? Like BMO, if you use this account for transactions, debit purchases, e-transfers, etc., you'll get hit with $5 per transaction. But as a pure savings account, this one is tough to beat. RBC High Interest eSavings account is another strong pick if you're already banking with Royal Bank. There are no minimum deposit requirements, and you can move money instantly between RBC accounts for free. Plus, you get full access to RBC's award-winning mobile app and online banking tools. The interest rate is decent, though not the highest on this list, and you won't earn bonus interest unless you pair it with another RBC product, like a checking account or investment. Still, if you're loyal to RBC and want simplicity and digital access, it's a reliable pick. So how do high-interest savings accounts actually work? Your money earns interest daily, and most banks deposit that into your account monthly. Unlike checking accounts where interest is almost zero, these high-interest savings accounts let your cash grow steadily and compound over time. With rates reaching 4% or higher in 2025, even short-term savings can see noticeable growth. Now here's something a lot of people mix up: tax-free savings accounts versus high-interest savings accounts. A high-interest savings account is great for short-term goals. The interest is taxable, but your money is liquid, perfect for emergencies or short-term needs. A tax-free savings account, on the other hand, is a registered account. You won't pay tax on interest earned, but you're limited in how much you can contribute each year.
and it's best suited for long-term goals. The pro tip: use both. Park your emergency fund in a high-interest saving account and grow your investments tax-free in a tax-free saving accounts. So, what's the best high-interest savings account in Canada for 2025? If you want the highest rate and can handle a monthly fee, KOHO is the front-runner. If you want a solid promo and trust big banks, Scotiabank delivers with up to 5%. If automation and simplicity matter, CIBC eAdvantage might be your perfect match. And for RBC or BMO customers, their in-house high-interest savings account make a ton of sense. Just avoid using them like a checking account.
Which one are you leaning toward? Drop a comment and let me know what you think is Canada's best account right now.
If you found this helpful, don't forget to like the video, subscribe to Business Snap, and hit the bell for more Canadian personal finance tips every week. Thanks for watching, and remember, your savings deserve to grow. Don't let your money sit idle when it could be working for you.